Welcome to UrbanHood, your learning platform.
I am Mushi Bhuiyan. I am with UrbanHood Alliance. We do this every week. So I expect one of the things that we want to share with you guys, just those who is new with us, please take a look at the website. We have two websites. One top one is the where you can find all the educational related content. Urbanhood.org is a sister organization of our parent organization is Urban Food Alliance. Urban Food Alliance is a 501c3 organization where it focuses urban food focuses on humanity cause, feeding people, helping people any way that we can with the resources what we have. And then Urban Hood is focusing education so people can support our parent organization. Those who is new with us, please make sure that you understand the disclaimer, you read it, you understand everything we are sharing educational purpose only. We expect you do your own due diligence and make sure you do your research before you invest any money. Understand the risk of investment risk. Uh, When you sign up any account for investment risk, the in a way what it tells you that if you lose 100% of your money, you cannot go back to your broker and sue them. That's in a nutshell. That's what this investment risk is, because you can make a lot of money at the same time your chance of losing money also is 100% is there. So that's why it's important for you and we all come together and learn. That's what Urban Hood Alliance, Urban Food is offer. And this kind of causes we do every week. Now those who is new with us, just know anything you want to do research with, let's say you want to learn, if you go to website finance.yahoo.com, you'll see Yahoo Finance is they give a lot of good information you can learn free. However, at some point, if you want some of the information that relates to investment, or you want to go deep dive, you have to pay for it, right? So same thing what I am saying with Urban Hood, what we do, we offer education, we purchase with the fee membership, we collect the money first, with the money we collected, a portion of the money goes towards this kind of getting paid tools. And then together we do research, and we find our edge in investment. Three things you need to make sure you have knowledge, you are informed with your investment risk, understand the risk, understand how much money are you willing to take a risk to make money. Number two is, once you take a risk, that you need to understand what is how much are you willing to lose to make X amount of gain or X% gain, right? That's the investment risk. So in edge gives you that, when we have that education, we know if a stock goes down, we have enough information that gives us as confirmation, knowing that, okay, this stock is going to turn around. Don't be panic, or do not do panic sell. And then at the end, we are most of us, as you can see, that we come from different background, but there is no limit of learning. We learn, at the same time we share with others also, that others learn with us. So together we grow and protect our hard-earned money. That's what Urban Hunt does. Now let's stop this. Now back to, let's see what's happening. First, before I go, know those who is in our chat room, if you are not in the group, make sure please when you go to the website, upper right side, a lot of time people say, how do I still join your live chat? You should see this link, upper right side should give you. And also in the chat line, somebody might share with you also today in this Zoom chat line. But once you join, and you'll see that we share a lot of information. One thing I reminded people over this weekend, no, this coming week is going to be short week. This is like Christmas, and next week is going to be New Year. So please do not go into any FOMO. Anything could happen. And those who is doing option, if you are at profit, take profit and don't wait till last minute. What happens traditionally during this time, most of the traders goes back, they are in vacation mode. You'll see a lot of less volume coming in. When there is not enough volume, it's then you'll not be able to trade enough. So you know when you do it, it's a demand and supply. If there is not enough demand, then you are just sitting there. Oh, I put this order, but it did not go. It did not sell. Why is that? And many of you even paid in the paid room. You're asking that, hey, I put this order, it did not execute. Why? Hopefully you understand this is the reason why. This time, not most of the people, traders or people are in vacation mode, holiday mode. Volume is very low. So the news came up to out today, that we have a package coming in. Remember, market already discounted that a package is going to come. So it's not like tomorrow market is going to go even too much higher, but you'll see some bumpy road. If you're at profit, take the profit and just sit there. As far as this coming week, any activities, everything we are looking at economic activities, if that would affect the market. If you look at it on Monday is very calm, nothing really is happening, and on market side Tuesday, there is not too much stuff is there that will affect on Tuesday market. Wednesday is like typically unemployment claims and those number comes out that you'll hear, but right now based on what we are seeing, that market already knows it's not going to be too satisfactory. Market already is discounted that number. Thursday, same thing. As far as looking at this, there isn't any activities. And Thursday, the market is going to be open till 1 p.m. And then Friday is market close. All right. Then now that that's over, now let's talk about, when I said, the news that you guys already heard that, Senate already approved this. And with that, hopefully, market is going to be at least not going to go down. Some of the stock was suffering for a long time. It should turn around. That's one thing. The other news I wanted to share with you guys that some of you already have Baba sitting for a long time. So this week, before I come here, I was watching an article, the thing on Bloomberg, on the Bloomberg TV. It did mention that that Jack Ma had its meeting with Chinese government. Hopefully, there are something that on some of the things he has done, they didn't like it. Hopefully, they will go a little bit lean on him, and then you'll see the slowly, if they let that ant go IPO and then they remove the restriction, you might see some of those this movement happening with Baba. But still be patient can Baba come back tomorrow in 270, 280 fast. The later on, I guess we're going to open up the chart. Actually, let me see if I have my chart open. While I'm getting my chart open, if anybody has any question, fire it away. And I am opening my chart. While I'm doing, anybody has anything to add? Any questions?
Lucas, yeah, this is Sonny. Just a quick question. So you mentioned that, as a group, you invest in tools to help you, become educated on the risk assessments and you're identifying thresholds. So are you monetarily contributing each month or week to knowledge in this tool base as a group? And does that require, anybody that joins the group to also contribute to the tools as well, the knowledge that you acquire?
That's a very good question, Sani. Here, let me share my desktop. Where is my Zoom? Zoom. You see my desktop, right?
Yes, I do.
So the these are the tools we have in our portfolio for now. When you do stock trading, you need to look at some of the tools that you're using for research purpose, a lot of research, and some of the tools you get alert. Like, there are other organizations, they give stock alerts or option alerts and so on. Okay. So when our members are part of based on the different tier of members, so some of the members get access to some of these tools, like those who non-member means, is those who is giving back to the community. That if somebody would be buying would be buying this monthly basis, this much is ridiculous. But it takes money to make money. So hopefully that gives an idea. And do I? Yes, I invested myself with it. I'm not like, and I retired myself from that corporate world 3 years ago. When I retired, I opened a nonprofit organization, Urban Food Alliance. And back then when I started the journey with this, why is with this, what happened? I had from people that said they did not, honestly, they said they will make once they make money, they will donate to the cause. And then what I found out that those who joined from the beginning in January, February, we did very well. And I see that people start now are not donating to our charity. Then some of them I confronted and said, hey, what happened? And so, you know what, I have this obligation with my church, with my other charity. Oh, you
Right.
didn't have this obligation before. So then I had to step up my game, and then we found a creative way with all the other members who is contributing today in there. They said, hey, we'll help. Let's start forming that urban hood. Okay.
Makes sense. Thank you.
So here you can look at it as the chart. Like again, this is also those who are using it. You can get it free, but we are using commercial purpose that gives us more capability with the tool. Now look at it. If you are looking at QQQ is like Nasdaq that ETF. It tells you where it is now. I'm looking at daily chart. I'm changing the time on the daily chart. If you look at it last week, pretty much Nasdaq it did a very good run. You started last week. It's on 10th, which is when day was 10th was last week, 14th until 18th. Let's see on 14, 15, 16. You see the 14, 15, 16 every day. The Nasdaq did very well, and Friday it kind of pulled back. Nasdaq. As you know, the reason it pulled back, the package did not come in. They could not come make the agreement. It pulled back. Now, still with this momentum, tomorrow I would not be surprised to now go Nasdaq or touch this and whatever 313 or this. It can go higher. All right.
Makes sense.
The
Okay.
pattern is there that it can go higher, but if it goes higher, just those many times you look at it, it goes higher, it pull back. So don't be those who's thinking that, hey, I want to, is this is this a good time to invest? No, you just wait till when it come down, pull back. We do not buy high and go but sit and hoping and praying is going to come around. This is the so Nasdaq is here. Let's look at SPY, which is a Standard Poor, S&P 500, which gives, where do we see the similar pattern? It went, it did very, very, very good on let's say Monday. It did not do or more seller, but at least it did not go down before. It stayed above. Monday, Tuesday, Wednesday, Thursday, Friday it pulled back. The same thing at the end of the market, it pulled back because package did not come in. Tomorrow you might see in a good day, it can come back again all time. It already reached all-time high before. Can it do before Christmas close? It may do, it will come touch an all-time high. But at the same time, those people, a lot of people are taking the profit, just book the profit. If you are there, don't get into FOMO mode. It's like, hey, what, I'm missing out. That's a small, medium, same thing. Russell 2000 IWM. Is look at it. Is whole time it's going steadily going higher. It has chance to go higher more, as you can see. In the past, what happened when stimulus package was there, it was not there. Most of these big cap, the mega cap, the business, they were doing very well, but small medium was suffering. Now money is shifting in the mid market. So when money is shifting in the small medium business, that tomorrow you'll see that this week this one can go higher. It might go out of this band. All right. And then now Baba one I mentioned, I'm going to, as I was started talking, look at Baba where it is in Baba. This Monday, Tuesday is kept down. Those who at some point this week it came outside this. This is a long term, not short term. It's a good company, solid company. It will turn around. in the days like this that you don't just sell too much, you just keep buying and say the buy and hold. That's the strategy you apply. So what do you do? It came down. That day, I keep adding more. I mean, I believe in the company. Are they going to get delisted? It's not going to happen overnight. It's not. If it is, it's going to be regulated. But the company like this, they will follow whatever the regulation here SEC comes up with it. Okay. So at the end, look at Baba. That is sitting at this range. It came down below say 250, 60. When it came down, it's sitting there. Tomorrow you'll see that this week Baba might, hopefully first it has to be above 265. You see that if it can stay above 265, then next one is 270 and above. It does our 277, it won't go right away. But I saw that a lot of the options, unusual option calls came in for Baba last Friday. Those who's watching Flow Algo data, you have Flow Algo and Benzinga data, you can go back in there. You can see that there was a lot of call came in for Baba that this end of this year means the 31st of January that they are making a good call 270, 280, all right, and 290 also call coming in. But those who is doing a short, please do not get into those short call. If you are now doing it, just you can make a leap call. As long as time is in your favor, you will get rewarded. Okay. Baidu. While I'm with some of the Chinese stocks that want to show you guys, look at where Baidu is. It has awesome run. I know those who is with us from the before, even one below 130, we said buy and hold, sit there, hold, it's going to pay off. Look, it came all the way to 200, it touched 200. It pulled back, but it stayed there. Can it go higher? You never know. It can go higher, but I would not get into that. I had all the position with the Baidu. I have stock options. I got out. Now I'm waiting to pull back. When it pull back, then I'm going to get back in. But right now I'm not on the upside. I'm
not sure of the format of the call. Do you guys have? Is there time for open questions, or is there?
Oh yeah, that's no. You can ask question. It can be interactive. Usually we share. But yes, honey, you're welcome to ask question. Let's see, and then if we think we're going to cover later, we are. But
Sure.
And at the same time, I want to let you know that we have another speaker, Stephen. The very good friend of mine, long time. That trading. He's a long time trader. He's after me. He's going to take up and share some of his view. And then we're going to open it up for question. But if your question is related to this topic, what I shared, please go ahead, fire it away.
It's generally related to ups and downs and strategy, like you mentioned. So obviously like March 14th to March 28th, stocks took like a 25 to 60% tumble across the board, right? And since then, if you look at the major players, everything's going back up and either back to originally where it was in March 14th, or in some cases it's exceeded where it was on that day. Do you, like if it hasn't reached back to where it was, do you see that, I'm going to just throw a random stock out there like Nike, right? Like Nike, if you look on March 14th, I think it dropped how much percentage? And then now if you look at their growth, they're going back up, and I think they're back to where they were on March 14th and may have exceeded. Do you see that to be the trend with across the board, like generally, and that's a very high level and very broad question, but just thinking about eventually things have to kind of normalize, right, to go back to where they were before.
Right. Yeah, if you look at it right now, I'm looking at it as a QQQ. This is NASDAQ. You see what happened NASDAQ at March. It's a March 20 time. March 20, around that time, market went down. You see that?
Right.
Although it came down, and so stuff I was showing you at the band, and you see on the right side what shows you the price. On the right side, where NASDAQ not only recovered around, let's say June time, recovered everything it lost entire NASDAQ, and now it's like all-time higher. It's like a QQQ that ETF tells you 310, 235. So What happened at this time? Did the question to you that when you hmm, we know economy is did not improve, more and more people out of the job, a lot of business is already going to go out of the business. How's that possible, right?
Yeah, I mean, yeah, they tried to open them back up at that point, but yeah, it wasn't enough, right? Right.
So this is where education comes, because what happens, money shift from one sector of the business to another sector of the business. At the same time, when money shifting at one sector to another sector, not on the same sector, everybody makes money. Okay. So then there are things fundamental, technical, and stuff I'm sharing with you is all technical. Those who you may already heard earlier that that when we have our members, when becoming gold members, we have over 200 classes sitting there, where that those classes also are sitting on our portal, that when you become member, that you will have access to all those classes. But there are things that people can understand. This is the time to understand, to learn, that hey, what's into it. It takes time to learn it, but once you know that everyone is everyone, that people make money, but at the same time you make money, you lose money. If your winning is much higher than lose, who cares? Who cares means we do care when you lose money, but our rate of winning is much higher, more than 70-80% of rate, that when we are sharing alert, we are sharing a trade with our members, right? This is where it comes from. The education is more very important, and you want to adapt your approach, you want to ahead of the market. Okay. um So yeah, same thing, any stock like what you said, Nike. Yes, Nike, that's their Nike had an NKE. I know that earnings, those who already took Nike, you said Nike was also at same time. Look, Nike came down long, it recovered it, but slowly it's going up, and it came down here. Long time sitting there, but Nike did Friday, although earning came good, Nike, at the end, there was a lot of sell happen on Nike. But like earnings came back, after earnings we saw Nike already is up. Tomorrow, when it says, don't be surprised that Nike can pull back. We have seen that all, like in one bad news in the morning, the stock goes down, and then people say, wow, what happened? But based on the earnings, what I saw, that is Nike had a very good sales in their e-commerce. Unbelievable numbers came in, right? So yeah, so it's good that money shifting from one side to another, but there are others also. We have seen the Etsy, and then you see Shopify, Amazon is suffering long time. So some sitting there, some is going to go higher. So it's all investors shift money from one place to another place, the thing, and then once they take profit, they move on to the next one. So nowadays, a lot of investors are like a kangaroo approach. They don't sit there and hoping something gonna happen. They just made enough money, they jump to another one. And it goes on, as soon as they have the profit, they goes to another one. There is no loyalty. Steve, floor is yours. And then I know that you wanna share, and then we are going to open it up for Q&A.
All right. I guess, can you hear me now?
Yes, we can hear you.
Loud and clear? Okay, great. Okay, so yeah, I just wanted to say happy holidays, everybody. It's the last weekend before Christmas, and I guess it's very glad to see that there's so many people actually online, especially this last weekend, because I'm pretty sure that a lot of people are probably still, doing the last minute Christmas shopping or doing the holiday planning. But yeah, for the people who are on tonight, great. It's good learning mentality, and you'll definitely learn quite a bit tonight. And you'll definitely reap the benefits of this week's bonus of information. So I guess let's first start off with, I guess, just kind of piggyback. I know you asked about Nike. Yeah, Nike was actually actually one of the very few companies actually reported on a Friday, which is actually pretty rare. Most companies don't really report on a Friday, but yeah, they actually did pretty well. And overall, Nike is a good company for the long term. So I would definitely go with it. I wouldn't think too much about it. It's one of those things where you can just kind of buy and just ride the wave up. So getting back to the week, for the game plan for this week or so. So actually this week we actually do have, and especially for this month, we actually do have quite a bit of news that is probably a little bit more busier than, I guess, past Christmas weeks. So the first thing that we're probably looking at is probably Moderna. We wanted to kind of just look to see what the vaccine updates are, because this is actually the second of the, I guess, the healthcare companies that are going to be releasing their vaccine, because the first one was actually Pfizer. So now it's Moderna is actually the second one. So the another thing that we all actually kind of look at is the stimulus talks. So, there has been a lot of, I guess, talks about the stimulus, and they still haven't, Congress hasn't pulled through on getting something going with that. And especially with now more people are continuing to keep losing their jobs. This is actually a pretty big thing. So, if we do get a stimulus package that does pass through, then we could be looking at, another big rally in the markets. And overall, I have to say I'm still very, very much bullish for the long term. And of course, another thing is that, as you probably all know, Tesla is actually going to be entered into the S&P 500 for tomorrow morning. And of course, that's actually a really big thing. With Tesla, it actually will be the sixth largest company that will be trading in the S&P 500. So this is actually really big news. And as you guys have been following Tesla has been performing very, very well in the past year. And especially, as I mentioned about 2 weeks ago, about us getting into the EV space. So this is actually pretty exciting news. I mean, I know a lot of people actually look at Tesla as being more of like a car company, but for the most part, it's actually a technology company. So I'm actually pretty excited, because I know a lot of us have our retirement accounts in Tesla, and have been working with Tesla. So the fact that it's going to the S&P 500. We are looking at some really good moves, and it should be very bullish for us in 2021. And of course, another piece of news that did come out on Friday was JP Morgan and many of the other banks. They were just mentioning about how they were doing a massive buyback. So this is actually really was good news. And as you saw in the after markets, most of the banks started rallying, at least about 4 or 5% in the after hours. So I kind of expect that to be a very, very good thing, because most of the economy is pretty much dictated through financials. So if the financial is doing well, then chances are most of the markets will continue to move in that direction. So, and that's what makes everything so bullish. So I know there's still a lot of fears, certainly with the many deaths and the many new cases that are rising. But overall, the overall economy is doing much better than what it was before. Because the thing is that when we look at in general, why is it that the markets keep making all-time new highs? It's basically an indicator for most of the larger companies. So that's why it doesn't really look at the smaller companies or the smaller businesses. And that's what we're looking at. So that's why also on Wednesday, Paychex is actually going to be reporting. And if you actually take a look at that and see how they do, that should actually give you a better idea on how the economy, the stock market is going to be doing in the future, because that's going to be able to tell you, how many people are going to be getting employed, because by the many checks that are put out, obviously that means that people are getting jobs and start working again. And then of course I know that Mushi did mention that we do have a shortened holiday week. Christmas Eve we'll be closing at 1 p.m. So with that said, and of course Christmas obviously is closed on Friday, as he says before. I do have some of the special sharing that I would like to kind of present this to many of you that actually joined us tonight. And this is actually going to be a really nice bonus, because of the fact that we do have a trade that I can actually give to you for either starting tomorrow, which is Monday. And then of course we're going to also have a special trade for you for Thursday as well. So with that said, let me go on here and try to share my screen. Okay. So what we have is and I was mentioning before about Tesla being put into the S&P 500 for tomorrow. A lot of this has a very strange coincidence, and of course, you know, a lot of people probably expected in prices in. But what we have here is the S&P 500's future holiday trade, and what this is showing you is that anybody who pretty much buys the S&P 500 futures about 5 days before Christmas has a high percentage ratio of winning on those type of trades. So for example, if you would actually buy it on the fifth day, as I was mentioning, the net profits is around about 24,025. And out of a total of 22 trades within the month or so, 21 of the trades will be winning trades. So that's actually a very, very high percentage. So what I started doing was that on this past Friday, I actually put on some trades on an S&P 500 index. So I bought it on Friday and I held it through. And as you know, from the S&P 500 or most of the overall averages on Friday, the markets actually rallied the last 15 minutes before the close. So this actually trade it worked very, very well on that part of it, because I actually just kept a dollar cost averaging on the way down, and I was getting better prices as the markets was selling off within the pretty much about 90%, 95% of the day of the trading session. So if we get down to the last, which is the holding days of, if you actually bought it on the 7th, you're still looking at net profit about 24,387 overall. So you're still winning. But there is actually kind of what we call that sweet spot. And of course, the sweet spots would be anywhere from between the Friday from last week to tomorrow's trade. So what I would actually do is, you can actually play any type of derivative of this. I like VOO, I like VOOG, I like the SPYs, SPY. And if the other SP 500 funds that pretty much mirror the SP 500, so you can actually put those trades on, and what you're going to do is that you can just pretty much hold the trades until after Christmas, and then from that point on, you should be in really good shape. Because usually, what historically is, as you probably heard, we have like this Santa Claus rally, and of course this is the gift that keeps on giving. And of course, I believe that's what's going to be happening for this year as well. So usually what happens is, when you have like the Santa Claus rally, the rally pretty much rallies on up to some about mid-January or so, or into February. So we are definitely looking at, the markets pushing to even more new all-time highs. So this trade actually worked very well on that part. So this is my my trade for you guys. If you want to take advantage of the S&P 500 futures holiday trade, and yeah, you could just go on ahead and you could just buy some more of that for tomorrow or the following day, and you should be in pretty good shape. The next trade that I have is the Visa trade. So so with Visa, as you know, Visa actually is a solid company. As the economy starts to pick up again, it's one of those things where people are going to start using their credit cards, and they're going to be spending more. And especially in this type of the season usually there's so many people who are actually purchasing many gifts, for their loved ones for the holidays, and this will continue on until even after Christmas, because you figure, well, people will probably take advantage of special deals after, because a lot of retail has to get rid of their inventory. So this actually makes perfect sense. And Visa is fundamentally just a solid stock overall. So whether you bought Visa or you bought MasterCard, these are just great ideas to choose from if you are investing for the long term. So the way that this Visa trade works is that you actually want to hold for 35 days. So that it's meaning that you kind of just want to just hold it in for a little over a month. And and it is a slow grower, so don't expect it to shoot up or like a jackrabbit. But this is actually just a great trade for a lot of the people who are looking to try to get into a really conservative, a super conservative long-term trade, and just hold it for years. Because that's what we're supposed to be doing anyways. Because you actually do want to have something that you want to have your portfolio for many years. Because with the compounding growth of the dividends being reinvested in, it's going to compound over time. So it's going to make you a lot of money over time. So the way that this works is that if you were actually just to buy 7 days before Christmas, or in this situation, the prime hot spot, sweet spot would be the 1 day. You're looking at about 68.44 net profit, and that is actually the highest. So that's why this trade actually works the best, where you can actually buy this on Christmas Eve. And as I was mentioning before, it does close at 1 o'clock, so you have just a few hours just to make that trade. And if you were to buy it either the Christmas Eve day or the day before, you are looking at a very high percentage of winning, meaning that you're looking at 10 out of 11 of the trades that are going to be winning on Visa. But overall, it really doesn't matter, as I mentioned before. But if you wanted to kind of play this trade, this is actually my holiday gift to you guys. But I guess overall, that's pretty much, for the most part, what we're looking at for trades. So I guess what I can do is I can always open up the floor. I know that somebody did have a question that you wanted to kind of just ask about, like stocks in general. I can definitely go with that, and we can use that for this part of the segment.
Steve, this is Vikas here. I have a question.
Okay.
When you, what is the delta that you look at when you are, selling a week or 2 weeks? You mentioned 2 weeks as your preferred time of selling, but what is the delta that you look at?
So yeah, if you would actually buy a stock and you hold it for 2 weeks, we call it more of like a swing trade. So these are actually just special trades that we are having for this holiday season, and these trades were actually recommended by a pretty famous, well-known chartist and technicalist. So I wanted to be able to kind of share that with you, and a lot of the some of these chartists and technicalists have actually done very well in some of the trades that I've done in the past, meaning that there was actually a fantastic trade that they actually offered during 4th of July. If you would actually bought the S&P 500 at that time, a week before 4th of July, and you held it through 4th of July, you would have made a nice profit on it. And I actually made that trade, and it was fantastic. I actually made quite a bit on that. So that's just a little extra bonus stuff. If you actually wanted to kind of trade this week, as Mushi did say, that trading most likely will be pretty thinly traded, because like I said, a lot of the pros, they kind of just they leave for vacation, take the week off, because they work so hard for the whole year, and they just want to just enjoy time with the family. So yeah, expect the volume to be very thin, but just a little bit more busy for this week, because of the fact that one chartist technicalist actually this company came up with these particular trades.
Sure. Got it. Thanks.
Steve, one thing you mentioned about Tesla, I'm trying to understand what happened on Friday, between 3 to 4, it was a very bearish on Tesla, and then it became bullish, like it went minus $20 around 3 o'clock, and then it became bullish afterwards. And at the very end, if you really look at after hours, it went up to plus 50 or something, then it dropped up to 690, then it is minus 20 after that, right? It was, so I'm trying to understand what happened, what was the reason for that sudden switch between bearish and then bullish, and then lost the momentum at the very end.
So if we get back to, and we talk about Tesla's history. So Tesla did very, very well this year. I believe it's went up over 200% this year alone. But there was just a series of just news that just was happening with Tesla. Tesla, like I said, just really got into the EV space. They went through a series of splits. They actually went for a 4-for-1 split, and then after the split, they would just announce that they were going to be put into the SP 500. So with these type of news, compounding, the stock was able to actually get some type of momentum, and that's what actually forced the stock to just keep moving, because once you get that momentum, the stock just keeps on going. And so because Tesla has ran up so much, yeah, of course you're going to get a little bit of profit takers, and you're going to get some people that are going to pull back. But when you hear these type of upgrades and downgrades, I would just pretty much take them like a grain of salt, because you just got to think that the people who never really got into it and they missed out on these big runs, yeah, they're going to go out there and they're going to say they're going to be bearish on it, and they're just going to try to take it down so that this way they can just kind of just manipulate the markets and try to get into a really hot stock at a really good price. So what happens is that when they knock these type of stocks down and try to get in a good price, now if we're talking about a lot of the pros, we're talking about like the guys who have the money, that have multi-million dollars that they're throwing around, and and they want to perform for their clients. Now what happens is that if their clients actually see that they don't own a stock like Tesla, the clients are going to be really pissed off, and they're going to probably demand for the money back. So what these guys have to do is that they actually have to just go out there and just try to put like a little downgrade to try to knock the stock down a little bit lower so they can get in. And so the thing is that knowing that we have the Santa Claus rally at the end of the year, they want to try to get into the stocks at the lowest prices they can. So a lot of times they want to be, and most of these companies want to be into these outperforming companies, so that this way they'll look like heroes and they look really good in front of the clients. That say, that they didn't miss out on a particular stock that was rallying and outperforming. So this might be some of the contribution that really happened, why you probably saw you get knocked down. But overall, I do see Tesla does have a little bit more power to keep powering higher, and especially now when a lot of people start to realize that the S&P 500, that Tesla is actually in it. Yeah, you can definitely see a lot more growth in your retirement accounts, because the fact that it is the 6th largest company that's going to be traded in S&P 500. So hopefully that answers your question.
Oh, okay, thank you.
Hey, did everybody have anything else they wanted to ask about?
Steve, you mentioned about Visa and S&P futures, right? Are those only stocks, or is there any short-term options is good for this holiday period?
Well, the thing is, I'm not really familiar with options, but yeah,
Thank you.
This would actually kind of mostly apply for stock. But if you didn't want to play an option, you just might have to try to kind of quit out the option a little earlier, if that's what it comes down to. But I believe that the Visa trade probably would work for your option, because of the fact that you would have to keep it for over the 30-something amount of days or so. So that actually might work.
Thank you, Steve.
Steve, can you put the slide back up for the S&P futures?
Okay. Yeah. So let me put that up again, so this way you'll be able to follow that. And then what you can do is you can actually screenshot that if you need to. Okay. So here it is. So what I was pointing out before is that this is your sweet spot over here. 5 days, 6 days, 7 days holding. All right. As you could see, so anywhere between these few days, I would actually recommend on the 4th day, 5th day, 6th, 7th day, because like I said, your net profit is upward of 20,000.
And that is for SPY ticker, Steve?
Yeah, well, whether if it's the futures, if it's the SPY, you got to figure the S&P 500 or any index that follows it all trades pretty much relatively the same. So it should be able to work. And so what I did was actually I bought VOOG.
Okay, thank you.
Steve, when you say net profit, what's the capital investment? I'm not. I don't think I quite understand this.
Yeah.
So I believe when they talk about the net profits, they're talking about like the average of how much whoever invests in it. But for yourself as an individual investor, you can actually invest with whatever you're able to invest in. Like for example, if there's money that you don't think you're using for the next 6 months or so, you could take that money and you could just drop right into the S&P 500. And of course, this is just fantastic. The way I look at it, it's a win-win, and that's the reason why I'm able to be able to share that with you, because of the fact that whether if the market does go down or whether if the market goes higher, you're going to be winning in the long term, because the way the S&P 500 works is that there is a total of on the average about 500 stocks that are in the S&P 500, and what happens is that whenever a stock underperforms, eventually they'll be flagged and they'll be kicked out and they'll be replaced by something else. So like in this situation, the newest one that will be entered into the S&P 500 is Tesla. So that's how you'll know that over long term, anything that you pretty much own that's in S&P 500 is going to outperform. Is always going to be able to go higher over the long term.
Now, even S&P now is reaching, it's sort of at the all-time high. You're saying that it'll still go higher?
Yeah. So whether if you bought it tomorrow, if you bought it like a week from now, it really doesn't matter if you need to time that, because even if the market did go down and you bought these particular ETFs, what you're doing is you're getting more value out of it. Because as the market goes lower, and it is if you want to reinvest those dividends, once it goes lower, and that's why I always keep talking about dollar cost averaging, meaning that you want to kind of scale in more and more as the market goes lower. So as it trends lower, you're reinvesting those dividends at a lower price, and then when the market does bottom out and bounces back higher again, it starts to compound. So over time, that's how you're creating a lot of your wealth. So that's why the trade works out perfectly, because whether if you wish that the market goes lower, you'll benefit more, and if it doesn't go lower and it keeps going higher, you're winning the trade even faster. So it's just an overall thing that everybody should be in and be, at least be able to have some type of exposure to. And I always recommend that anybody who's starting a new portfolio should have something that is tied to the S&P 500. And then once you have that money invested into something that trades in the S&P 500, then you can start putting some more money to work into some more individual companies. So that's kind of like how the rule of thumb kind of works.
What would you recommend as the percentage of your portfolio to be in the S&P 500? I have quite a bit of stock in the S&P, VOO, but it seemed like it was dragging things down in recent weeks. So actually I switched out some of my position of S&P on Friday. So I don't know if that was the wrong move that I made.
I actually wouldn't touch it, and that's why I mentioned before that if it did go down, all you had to do is reinvest those dividends, and you would have got even more of a value, because when it comes, you get a share price that's much lower, right? And then when the market does rebound, then,
दो टाइप की रेंज आती है.
Okay, so yeah, so when it does rebound, then you'll see the full strength of that trade. So the thing is that I don't think you did a wrong thing, because by owning the S&P 500, you're really having that diversification. But do keep in mind that when anybody who does invest in individual companies, what they're doing is that they are setting themselves for higher returns, higher growth. So we get most of our returns from individual companies. But as a starting portfolio, you should always start off And it is actually recommended, even coming from Mad Money, Jim Cramer, saying that you should invest your first 10,000 into an SP 500 fund that mirrors something that mirrors the SP 500. And then from that point on, everything else you can do, maybe something a little speculative, maybe something that's a little conservative, an individual company, something with growth. So you overall want to be diversified, and that's what the whole the bottom line is being diversified.
Uh-huh. And the percentage of your portfolio in the S&P 500?
So say, for example, if you were to choose a total of 5 stocks, which I actually recommend, having 5 holdings in your portfolio. And say if you had an ETF of the S&P 500, then obviously we're looking at 20%. So 20% of your holdings will be in that area. And then maybe like another 20% might be in something like an Apple. Maybe another 20% might be something in growth like a Tesla. So you see how that works?
Mm-hmm. Okay. Because I thought I was told that like you shouldn't hold anything more than 5% in any one position. So I guess S&P, because it holds many positions, you wouldn't consider, if you hold more than 5%, it would be okay because you're actually holding position in over 500 tickers, right?
Yeah, I think you got that a little confused though. 5% is really wouldn't work out. That would sound more common with a hedge fund, because hedge funds will probably own like maybe 50 like 100 different companies. So if you would actually take that 5%, that means basically what it's saying is that you own a total of 20 different stocks in your portfolio. No, we don't want you to own 20 stocks in your portfolio. That's too much to own. And especially for somebody who's not full-time in the business, you don't have time. You have to commit this full-time in order to be on top of 20 of your stocks. And I don't want anybody to have more as that many stocks in the portfolio unless you're actually doing this full-time and you commit that full-time, because it is require a lot of time commitment. So that's why if you actually have a total of 5 stocks in your portfolio, and now your portfolio is diversified up to 20% in each holding or so, then that makes sense, because now you can kind of sleep at night, and now you can actually just really focus on those winning trades.
Okay. Then the S&P versus the other indices, the Dow Jones and the NASDAQ, how would you the ratio? Should S&P be the biggest? If that's 20%, what should Dow Jones, which is the DIA, and the QQQ, what would be the percentage for those other indices? And the Russell, which is the small cap.
Well, each one of those indices are all different, though. They all got to be looked at as on a comparison level of an apples and or. In this situation, apples and oranges, right? Then they're not all the same, because if we kind of break down what each are, the Dow Industrial Average is a total of 30 different companies, or the 30 of the largest companies. The S&P 500 is on the average about 500, but it's not necessarily always 500. But many times I've seen it when they always had only about 499 or 498 stocks in it. But it changes very frequently. It actually has more growth inside of it. So just to be able to understand what's in these indices, then we have a better idea on how to work them. Now, getting back to the Dow again, like I said, it's 30 of the largest companies, and these are the 30 largest companies that actually kind of are like the bellwethers of the overall economy in the stock market. But they're actually more we call conservative companies. Now, with the Dow 30, there's actually out of the 30, there's about 28 that are paying dividends, while maybe like 1 or 2 of them or 3 of them aren't. And it's only because, like for example, like Disney, they cut off the dividend because of obvious reasons. And then of course we have the newest member of the Dow, which is Salesforce.com, and they don't pay a dividend because they've always been a growth company. So that's actually the difference, though. And then when we move on to the NASDAQ is actually comprised mostly of mostly tech companies. So close to around about 20% of the NASDAQ does include big companies like an Apple, and it's mostly, like I said, 20% is mostly a lot of the big cap trading tech companies. So those are the ones that actually really move the markets overall in general. So when we talk about where you should diversify, you're already diversified already, because the ones the tickers that you mentioned, when we talk about the DIA, the diamonds, or we talk about the QQQ, the triple Qs, which is the Nasdaq, and the SPY, which is the ETF for the SPYs, is the SP for the SP 500. So if you would actually own any of those tickers, you're already diversified already, because those are your baskets. So it doesn't mean that you only own one company. You own a basket, a series of different companies within those groupings.
Mm-hmm. Okay. And then if you're seeking dividend, to get dividends, would you recommend putting it in the DIA to get the dividends, rather than trying to pursue individual stocks paying dividends? Would you be better off in a basket of the DIA to get the dividends?
Well, these ETFs, they're actually very, very conservative. Like I said, there's a series, meaning that you actually own the good and the bad. So whether if you had a company that is doing terrible, if you own an individual company, or if you had a company that was doing very, very well within like the Dow or the SPY, then you're taking the good and the bad. So that's probably one of the only downfalls. Now, the thing is, most people actually invest into individual companies, because individual companies are where the money is at, and that's where you're going to get most of the growth, and it's going to outperform. Does that make sense?
Okay. Yeah. Thank you.
Mm-hmm. Okay. Hopefully I clarified.
Hey, Steve. Hi. This is Ekanchi. So, Steve, could you please let me know on the progress of Wish stock IPO that just came on Wednesday? Like, what do you
Which
think
one is it?
Wish.
It's a new IPO.
Yeah, the new IPO which just launched on Wednesday.
So, because I'm mostly of a technicalist, I don't usually ever play IPOs. But what I can say is that the reasons why is because there's just not enough data or data points that we can actually follow to actually chart out what direction it's going to be heading at. Now, but if we were to talk about some of the larger players, or the most popular common ones that we should be very familiar with, and that three of them that I can think of top of my mind right now is Snowflake is one of them. The second one would be Airbnb. All right. And I guess you've heard that one too, right?
Yeah.
And then I guess the third one would be well, what's the third one?
The Upstart?
DoorDash,
right? So those are the three IPOs that I would be actually looking into, and of course they do have some good news on those. But the problem with those is that even though that they are very good companies, though, they would actually price very, very high. So the meaning that, say for example, if maybe DoorDash was supposed to be priced at $80, but it opened at like $95, that it makes it really expensive. So when we talk about some of the smaller players, like the Wish that you are actually mentioning about, those are pretty much a day by day type of a thing, or for traders. So in my situation, if I were to actually play any of these type of trades, I usually love to play trades that they do have some type of history or some type of solid foundation to it, meaning that we can understand how much they swing. So if you want to actually play an IPO, let's look at and consider an IPO more as a day trade, if anything. And then of course, like I said, if you did have something that was long term, then that'll be a different story. So hopefully that answers your question.
Yeah. Thanks, Steve.
Okay. Anybody else have anything else they want to ask about? So what I'll do is, if you don't have anything else right now, I'm just going to
hi. What do you think about Apple?
As many of you guys know, that's been attending weekly. A lot of you guys know that I'm actually a very, very, very big fan of Apple. I know there's been actually a lot of negative Nancy's out there that have been trying to slam the stock down so they can try to get that in a lower price. But what happens is it's always been the wrong bet to actually short Apple. So with Apple, it's a no-brainer. If you know about Apple, Apple is the largest market cap company in the whole world, meaning that it's the most valuable company on the planet. That is definitely a stock that I would buy and I would forget. This is something that I would probably look at it as being like an annuity, meaning that it will keep paying over and over and over again for years of your life to come. And the story really hasn't changed too much since 1976, where it IPO'd. But overall, everybody loves Apple. You could go to any part of the planet, and you speak Apple, everybody knows about Apple. So this is actually the best company, and I'm not just endorsing it because of the fact that it is actually my best performing stock in my whole portfolio, which is probably giving me close to about 2,000% returns right now as we speak. So I still do believe that it can still grow higher. And yeah, just make sure, if you buy an Apple, you could just go in, reinvest those dividends. But as I remember, as it looks right now, it's pretty much trading pretty much right against that 50-day moving average, and it's ready to go higher. Because recently there was actually one of the analysts that actually upgraded it, and I believe that we can definitely see that thing go straight to the 130 level. So I'm still very, very bullish about it. And of course, they always have their product cycles where they're releasing the new iPhone, of course, the iPhone 12. And the best news of all is that they actually released announcing that they actually had to increase the product, meaning that they actually had to start producing more because of the demand. So that's actually very, very bullish. And of course, as the economy reopens up again, and especially with a new president, that's actually very bullish as well. Reasons why is that with the current administration, he actually wanted to put tariffs with China, and China is actually one of the largest, the second or one of the largest markets up there. And with the new president, being that he's probably not going to be as stern or strict with those tariffs, that's actually very bullish for companies like Apple or maybe like Starbucks, because now we can actually do more business with these top countries. So that also should be another catalyst that actually push Apple much, much higher from here.
Sounds great. Thank you for the information.
Now, just fair warning, with Apple, there might be a little bit of pressure this week due to California announcing that it's closing all its Apple stores. So if you are going to buy Apple, I wouldn't suggest to buy all your shares all at one time. I would suggest to buy it in portions or increments. That way, if it does take a little pressure and it goes down, you can always buy more and bring your average down.
Yes, I just want to just add for the guys here that's actually a good point, though. And I've always told a lot of people in my personal group that, whenever it comes down to buying or selling, you never, ever want to buy everything all at once. You always want to buy in increments. So meaning that you kind of just want to just buy a little here. If it pulled back, then you at least have extra money or cash on the sidelines you can actually put to work. So, and that pretty much applies for anything that you own. So if you're a person who's investing for the long term, or you're a stock picker for the long term, you definitely want to just be able to just buy small increments. So say, for example, if you know that you want to buy a stock like Apple, and you know that it was the best company, it doesn't even matter if it was the best company, but this will apply for any other stock, where if you plan to buy, you had $100 worth that you actually want to put into, just to talk about small numbers. So what you want to do is maybe you actually want to just buy like 25% during the first pullback, and then if the bull pulls like a little more, then you add another 25%, then you get add another 25%. So by the time you get down to the bottom, you actually have a bigger position. So it's almost like you have like this little pyramid. So that's kind of like the idea that you want to have. Mm-hmm.
Okay, I have a question, Steve. Apple, as like you also mentioned, it's the largest market cap in the world. It takes a lot of volume to move Apple's price. Do you think June next year 145 is a good target? I have some calls. That's why I'm asking.
Well, I have to say, I don't think that it's something that we can rule out. People are already talking about Apple going back to 200, and people who talk about they're going to 200, that's just hilarious to me. Because to tell you the truth, I've actually seen Apple cross 200 twice in my life already. So 145, I'd say that it's very likely.
Okay, thanks. So I'll add up some more then.
Steve, going back to the percentage of portfolio, actually, Apple is my second largest holding, and I have about 10% in Apple's. Is 10% reason?
It's 10%. You're breaking up.
Sorry. 10% of my total portfolio is in Apple. Do you think that's too high, or it's reasonable, given that it is the largest capped stock?
Well, it really depends. I don't know what your portfolio looks like. How many stocks do you own in your portfolio? Because if you have 5 stocks in your portfolio, guess what? 10% is basically what? Only almost about 10 stocks, right? So, but now if you actually have 5 stocks in your portfolio, then 20% makes perfect reasoning, right? And also an ideal portfolio would probably be 5 stocks and 20%.
I have a lot of different tickers.
Okay, so that makes the difference then. So that's what it comes down to. So if you actually had this portfolio that had 20 different stocks in it, either you call yourself a hedge fund manager, and then now that you admit it, you did have more than 20. So what I would recommend is that I think you should definitely be cutting back. I think you need to kind of just consolidate your portfolio and not own so many, because it's like a tug of war. If you got your winners, you got your losers. Example, now your portfolio is not moving at all, right? Because now your losers are pulling down your winners, and then your winners are trying to keep up your portfolio. So if you actually want to have more growth and you want to actually have bigger and better returns in your portfolio, what I actually recommend is to trim it. Like, for example, I'll talk about something like really extreme, like my cousin. He owns almost about close to 100 stocks in his portfolio.
How many tickers I have? About
100.
Yeah.
It's way too much. Way too much. And that's probably why you're not getting the results that you're looking for, because now you got to a position where you have like a knee-jerk reaction, and you buy on headlines, or you buy on news thinking that it's a good stock, but it's probably just a good company. But the difference is the stocks actually trade much differently. So the stocks might not always respond exactly how the company that you probably remember. Like, for example, we talk about a Sirius, right? Now Sirius is it's a pretty low dollar amount stock. Everybody knows it. A lot of people are probably buying cars and they have Sirius satellite in their cars, but it doesn't mean that it's a good stock. But the thing is that with the new catalyst right now, with Howard Stern coming in, now there's a little more of a catalyst that should push the stock a little higher. But overall, there's a lot of these names that we know about, but that doesn't mean that they're good stocks. So what I would do is, like, over time, when we start making these all-time highs, I would just go in there and just try to just trim out a lot of your holdings, because you're not going to, until you do this, you're not going to be able to see the returns that you're looking for, because you have too many stocks in your portfolio. And unless you decide you want to quit your job, your full-time, your day job, then this is what you got to do.
Okay. Yeah.
Great.
I have a question
Steve,
about.
One more question, I think, because we've already gone over time, and I do not want to keep Steve holding back. This last question, and then Mushi can take over.
Hi. Thank you so much. This was very helpful. And my question is about Tesla. I think you did already address part of the question. Of course, it's very hard to predict, but once it joins the S&P 500, what seems to be, any idea where will it be going up, or will it be coming down? If I want to buy more, would there be more chances to buy it, or is it too late?
Well, I know a lot of people have what we call FOMO, the fear of missing out. So as far as I know, So Tesla has ran up quite a bit. It actually came back down, and it's been doing what we call like a little consolidating phase. So it's kind of just been bobbing up and down a little bit. But overall, no stock is going to go up in a straight line, and no stock is going to go down in a straight line. You're always going to get some type of pullback, and that's just the way the markets are. And I wouldn't worry about that. But so that's why it's a good thing that you're actually here in this group with our Urban Food Alliance, that we can actually teach about the technicals. Now, the thing about technicals, it's so important, is that what it does, it actually takes the emotions out of investing and trading. So, if you fear that you're going to be missing out on it, I would just go and just rely on the technicals. Go and see where things are overbought, or see if the stock is oversold. And then from that point on, you can make your judgment. Now, if you think that you're very an emotional investor and you can't make these type of calls, what I would actually recommend is that you can do your homework ahead of time, look at your charts, study your charts. And what I would do is that I would actually just place these orders ahead of time, meaning that if you can actually see what a floor is, and if you put the order in ahead of time and say, you know what, if stock, so ABC goes down to this level, if it executes, that means that I will own the shares of the company. But if it doesn't execute, then no harm done, because now you won't own it, and it will still keep trading until it hits that point, right? So that's what I usually recommend for a lot of people who do have like this thing of fear of missing out, is that I would actually just do the homework ahead of time. And of course, usually the best times to actually do this type of homework is usually when most companies and stocks are making all-time highs. So this way, most stocks who are doing very well, they don't make these 52-week high lists for nothing, unless it is some freak accident of news. But for the most part, a lot of these companies that do make these type of all-time highs, they're up there for a good reason, and especially like we talk about, like a Tesla. So getting back to Tesla, what I would do is that, yes, like I said, I will wait for a decent top pullback. And like I said, just you go use the dollar cost averaging strategy as well. If you can't wait, but I think that you'll definitely get a chance to buy at some type of lower levels. But just keep in mind that Tesla is a growth company, so you're going to see these big swings, and because of these big swings that does happen with Tesla, yeah, you are going to feel that fear of missing out. So like I said, because of this big swings, you definitely will get a chance to buy at lower levels.
Thank you so much.
Hey, Steve, thank you so much, Steve, for all this your time. We're going to close this with Tesla, since everybody wants to tell Tesla, and you're talking technical. I just pull it up. Just with your eye, just watch this. How crazy it is. Tesla, this Friday, at some point, look at that, it touched 684 around 9:30 in the morning. 9:30 in the morning, Tesla is there, 684 is the start. And right before market close, Tesla just came back exactly the same way, 684, 694, you see that touched. But right here, right before that it touched, is 4 o'clock. It's just around 4 o'clock that. But here, 3:30, just pull back. How much it went down? You see that when the pullback is typical, same pullback, we believe in technical. It came below 628. You see that here, buyers are coming below 228 at that range. The big swing happened right at 3:30 on Friday. Yeah, that's a lot of people fear of missing out. What happened? Now imagine the guy who got his 673, and I'm sure same person when he got 600 saw 628, was the heart attack. I was not looking. I was not even in front of computer that time. But I'm sure I have enough Tesla. I would not feel good if I would see this into like that. Right? So what we're learning is like what Steve is saying. That's why during midday when we set up every week with those paid groups, I think now during the holiday we do this even to everybody, and it's open to everyone. Go our website on UrbanHood, you'll see the meetups. So join us middays tomorrow during the midday. We'll do this kind of session. We'll go over more technical. We'll share with you what we see based on the market, and then you do not have to pay anything. You just come learn with us. Hopefully, as you come and join means keep learning some of this. And if you want to become serious, then you can consider to be our paid member. For now, you do not have to be. All right. But to Tesla, anyone who is looking Tesla, do not get into fear of FOMO. Tesla is already ran enough. It's like what Steve says, what goes up, look at this band. This is what I think. What goes up here, it has to stay inside the band. It has to come down. That's always the case. What goes up always goes down. So if you want to buy Tesla, you buy it whenever it pull back. Now, just with your mind, just imagine a company what this is doing in auto industry, where you have Ford, you have GM, you have BMW, you have Honda. You compare all of them. You put them together. You bring McDonald's. You not all of them. It's Coca-Cola, McDonald's, Walmart, and Ford. Put it together. Tesla is pretty much same market value today. Technical and fundamental does not make sense. They have to prove, now that they are in S&P, they have to prove that they are worth staying in S&P, and they can produce result. So a couple tweets, and then all the media, and just keep all the future coming in. It will last for a while. You have to just this company has a lot of more success if they can deliver. If it doesn't, it can pull back. Right? And anybody who followed Yahoo at some point, that look at 90s Yahoo, it came the Google Yahoo was nobody, but look at what is Yahoo today. All right, the stock and any of those. So be ready. Don't get into the FOMO and be in the bust. Just become a very smart buyer, smart investor, and just buy when it pull back. Not time like this. Okay, guys. I know that it's late. I think it's close to.
There's one thing, Mushi. I just want to add that I think for these middays, you said it's open for everyone for now.
Yes.
But I think next year, once we move into the paid, it will only be for paid members.
Thank you, Vic. That's what we said. This week, next week, enjoy the show, learn with us, and then if you think it's value to you, then join. Otherwise, just join any organization where you can grow. Remember, this money, the money you are losing by not learning, it's just you have nobody blame besides yourself. That's why we keep that priority to our members. If you are a member with us, we have over 200 hours of training sitting on our online. And then next year we are going to have not only online, private classes we do with the members, different topics, different options, technical, fundamental, then strategies we talk about, some of those cover call you might hear. Sometimes you hear, okay, what are the straddles? What's the iron condor? All those strategies in the advanced classes we talk about it. And we discuss, and we even open up example, we even coach, mentor people. So if you find any organization does it at the same time we give you trades, by all means, please go there. But don't take chance with your money where you just think, what I can do on my own. If everybody can do on your own, then Home Depot would never have that many, the contractor, that many business by going to Home Depot, buying all the tools and say, I'm the expert. All right?
Right.
All right. Thank you everyone for joining, and hopefully we'll see you guys tomorrow. Again, Steve, thanks a lot. We appreciate your time. Every time you come and give a gift like that, we truly appreciate that. All right. Thanks again.
Yeah,
and
Steve, thanks.
Everyone, have a good night. I'll see you guys tomorrow, midday.
Thanks for watching. Visit our website, UrbanHood.org, and join our community at meetup.com and look for financial freedom for you. Thank you, and we hope to see you soon.